Right now, as you're watching this video, something strange is happening in America. The headlines are saying the US economy is strong, the stock market is hitting record highs. Experts on TV are smiling, but millions of people at home are asking a very different question. If the economy is doing so great, why does life still feel so hard? Why do groceries feel expensive? Why does rent feel impossible? Why do so many people feel one paycheck away from trouble? Today's video is not just about numbers, charts, or Wall Street. This is about real life in America right now. And if you live in the US, or even if you just care about where the world's biggest economy is heading, this is a story you need to hear till the end. Before we go any further, take just 1 second to like this video and subscribe to the channel. It really helps us keep bringing you deep, honest analysis like this. This is the US report, where we break down what's really happening behind the headlines. If you want clear, simple explanations without noise or hype, you're in the right place. Now let's talk about today's America. On paper, the US economy looks strong. The Dow Jones has crossed historic levels. Big companies are posting profits. Tech stocks are flying. Investors are confident. From the outside, everything looks fine, even great. But when you zoom in, when you listen to everyday Americans, you start hearing a very different story. People are working, but they're tired. People are earning, but they're stressed. People are surviving, but not really moving forward. For many families, inflation may be slowing on paper, but prices are still high in real life. Groceries cost more than they did a few years ago. Rent has gone up in most major cities. Car insurance, healthcare, utilities, everything feels heavier. Wages have increased, yes, but for many people, they haven't increased fast enough to truly catch up. This gap between what the economy says and what people feel is one of the biggest stories in America right now. Let's talk about jobs. Officially, the job market is still considered strong. Unemployment is not at crisis levels, but something is changing under the surface. Companies are becoming cautious. Hiring is slowing down. Layoffs, especially in tech and corporate sectors, are still happening quietly. Not massive headline-grabbing layoffs, but steady, silent cuts. The kind that don't make news, but deeply affect real lives. Many workers are holding on to jobs they don't love, afraid to take risks, afraid to switch careers, afraid to demand more. And this fear matters, because when people are afraid, they spend less. When they spend less, growth slows. And when growth slows, the economy starts to feel fragile. That's why many economists say the US is not weak, but it is vulnerable. Another big factor shaping today's economy is interest rates. For the past few years, borrowing money has been expensive. Mortgages are costly. Credit card interest is high. Business loans are harder to manage. The Federal Reserve raised rates to fight inflation, and in many ways it worked. Inflation is no longer exploding, but these high rates come with a price. Home ownership feels out of reach for many young Americans. Small businesses feel pressure. People with debt feel trapped. The big question everyone is asking now is simple. When will rates come down? Markets are hoping for cuts later in 2026. Investors are betting on it. That hope is one reason stock markets are so high. But the Federal Reserve is being careful. They don't want inflation to return. And that means everyday people may have to wait longer for real relief. Now let's talk about the stock market versus the real economy. This is where things get confusing for many people. The market is not the economy. Stocks reflect expectations, not reality. When markets rise, it often means investors believe things will improve in the future. But that future doesn't always arrive evenly. Wealthier Americans who own stocks and assets benefit first. Middle class and lower income Americans feel the benefits much later, if at all. This has created a growing divide in America, a two-speed economy, one where Wall Street is celebrating while Main Street is struggling to breathe. This divide is not new, but it feels sharper now. And it creates frustration, anger, and confusion. Consumer confidence has improved slightly in recent months, but it's uneven. Higher income households feel more secure. Lower income families remain worried. Many Americans say they are cutting back, delaying big purchases, and focusing only on essentials. That kind of behavior keeps the economy alive, but it doesn't allow it to truly thrive. Another issue quietly shaping the U.S. economy is government debt. America continues to borrow at massive levels. So far, global trust in the U.S. dollar has kept things stable. But long-term, this is a pressure point. Higher debt means higher interest costs, and that limits future flexibility. It's not an immediate crisis, but it's a growing weight. So where does all of this leave us? The honest answer is this. The U.S. economy in early 2026 is not collapsing. It's not booming for everyone either. It's strong on the surface, fragile underneath. It's powered by confidence, but threatened by fatigue. It's moving forward, but carefully, slowly, and unevenly. For everyday Americans, the next year will be about endurance, about managing costs, about staying flexible, about preparing for uncertainty without panic. For policymakers, the challenge will be balance. Cutting rates too soon could bring inflation back. Waiting too long could hurt jobs and growth. And for investors and businesses, The message is clear. Optimism is high, but risks remain. This is not a time for blind confidence. It's a time for smart, cautious decisions. Here at the U.S. Report, our goal is not to scare you or hype things up. Our goal is to help you understand reality. Because when you understand what's really happening, you can make better choices for your future. As we move deeper into 2026, keep watching the small signals, not just the big headlines. Watch hiring trends, watch consumer spending, watch interest rate decisions. These details matter more than flashy numbers. If this video helped you see the U.S. economy more clearly, drop a comment below. Tell us how the economy feels in your daily life. Are things getting easier, harder, or staying the same for you? Your perspective matters, and others reading the comments can learn from it. Also, don't forget to share this video with someone who keeps hearing the economy is great but doesn't feel it in real life. Conversations like this are important. Thank you for watching. Thank you for trusting the U.S. Report, and we'll see you in the next video.